Kohl's is an interesting stock to consider, and I've had a lot of investors asking me about this company. So I'm going to review its latest developments and share with you my fair value calculation for Kohl's, which I updated today, and update my recommendation whether I think it's a buy, hold, or a sell. I'll do all that in this relatively short video, so let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its most recently completed quarter, Kohl's management team said that they are pleased with their results. And when they said that, I was expecting some good numbers, and they said that their comparable sales were down 4.2%. And it's rare for a company to say that they're pleased with their results when it's down 4.2% year over year. But that's besides the point. If you set low enough expectations, you can be pleased with your results. Adjusted earnings per share of 56 cents were ahead of expectations. These results reflect continued progress they're making against their 2025 initiatives. It went on to say that they saw improvement in June and ended the quarter strong with July comparable sales flat to last year. So that's something to be optimistic about. Even though overall your sales were down in the quarter, they were improving as the quarter went along, with each and every month getting better. And July, which was the last month in their previously completed quarter, was flat. So no declines year over year. The improved performance was driven by their digital business and proprietary brand sales, both of which performed positively in July. In addition to this better than expected top line performance, they continue to operate with discipline. And I think that's the case with all of these brick and mortar apparel retailers, I want to call them, other than the discounters like TJ Maxx and Ross uh, and Burlington Coat Factory. I don't know if you can include Kohl's in that category of discounters where shoppers like to visit frequently for treasure hunting. You never know what kind of item you're going to find at a big discount. Those are the ones that are increasing engagement with customers. Other than those, most of these others are experiencing declines and considering store closures. Companies like Kohl's and Macy's and Nordstrom's and those higher priced retailers are finding it difficult to connect with consumers and get them going to their brick and mortar locations. They were able to expand their gross margin by 30 basis points, lower their inventory, and reduce their SG&A expense by 4%. Although they are encouraged with their second quarter results and the improved sales trend, they recognize that consumers continue to be pressured and are being choiceful with their purchases. And that's true as well. The consumer in the United States is increasingly facing more pressure as the cost of everyday goods are increasing and their wages are not increasing by all that much. So they're having to make difficult choices on what to spend with their money because the month runs out before they have any money left. And so that's a difficult headwind for companies like Kohl's. By the way, this document I'm reading from is the company's most recently completed quarter. I made this highlighted document available for my channel members, and you can join for less than $5 per month. So today I updated my discounted cash flow valuation for Kohl's, and there was a big upgrade in the company's intrinsic value. There were several factors that led to this, and most of which were on the company's balance sheet as their total debt levels decreased and their non-operating assets increased. This is an interesting balance sheet investment because some of those locations that Kohl's operates are company owned, and the value of those locations could exceed what, and in fact, it does exceed what they have reported on their balance sheet. It's a kind of weird thing where if you buy a building, let's say 50 years ago for $100 million, you record a depreciation on that building every year until that asset is depreciated to close to zero. And then you still have that location. It's not worth zero, but on your balance sheet, you have it listed as being worth zero. And that's kind of the situation Kohl's finds itself in with many of its store locations. Macy's is in a similar situation with many of its locations, and the value of those locations, the market value of those locations, far exceeding the book value they have on their balance sheet. So it's an interesting situation. Regardless, the intrinsic value per share I calculated for Kohl's is close to $26. The current market price is $16.43. This stock looks undervalued at the current market prices. So today I upgraded my rating on Kohl's stock. I had it rated as a hold all year long. And today this is the first time in 2025 I upgraded Kohl's stock to a buy.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.